If you're planning to finance a campervan in 2026, there's a real chance your loan gets rejected, not because of your credit, but because of the van you chose. You did the research, you watched the videos, you found the van, and then the bank said no. Not because your income was too low, not because your credit score was bad, because the van you chose, the one you spent 3 months researching, wasn't worth what you agreed to pay for it. That gap between what you're paying and what the bank will lend against, that's the mistake costing buyers $10,000 to $20,000 right now, and it's happening to people with good jobs, solid credit, and real budgets. By the end of this video, you'll know exactly which vans get approved, which ones get flagged, and what the bank sees that you don't. Here's what most buyers never figure out until it's too late. Lenders don't see your campervan the way you do. You see a van, a future, a plan. They see a depreciation curve, a collateral risk score, a default probability. And in 2026, those numbers shifted hard against buyers. Post-pandemic valuations collapsed faster than lenders adjusted their appraisal models. A van that banks confidently financed at $85,000 in 2022 now appraises at $52,000. But sellers, especially private sellers sitting on custom builds, are still pricing at 2022 peak values. That gap between asking price and appraisal value is what's killing loan applications. Banks call it the collateral gap, and it's getting wider every quarter. Here's the contrarian truth most buyers never hear. Your credit score isn't the problem, the asset is. Which means the solution isn't to fix your finances, it's to choose a different van. Smart buyers in 2026 don't ask what's the best van. They ask, what will the bank approve at the best terms? That single shift in thinking is worth $12,000 over the life of your loan. Not a rounding error, not a negotiating margin. A second vehicle's worth of money gone because someone picked the wrong platform. Smart buyers pick platforms that lenders actually want to finance, vehicles with documented residual value, clean depreciation curves, and wide lender familiarity. That's what determines whether your loan gets approved at 6.9% or rejected entirely. Here's where it gets brutal. Some buyers are paying $12,000 more in total interest over the life of their loan, not because they have bad credit, but because they chose the wrong van platform. The lender saw higher collateral risk, the rate went up, the term got longer. That's not a bad deal. That's a second vehicle's worth of money quietly disappearing into interest payments, and the buyer never understood why. That stops today. Part 1. Mercedes Sprinter, the platform lenders know and why most buyers are still overpaying for it. Let's start with the Sprinter because it's the van everyone wants, and in 2026, it's the van most buyers are overpaying for by $10,000 to $20,000, and this is where most deals fall apart. The Sprinter has the strongest residual value data of any van in this category. Lenders have a decade of resale history on it. They know exactly what a 2019 Sprinter 2500 high roof is worth in 3 years. That predictability is why approval rates on Sprinter financing are measurably higher than on custom builds or niche imports. But that reputation is now working against buyers. Sellers know the Sprinter is desirable, so they're pricing it like it's still 2022, and buyers, emotionally attached to the platform, are paying it. Don't. A 2019 Sprinter 2500 high roof with 90,000 miles should be trading at $34,000 to $42,000 in today's market. If you're seeing listings at $52,000 to $58,000 for that same spec, that's a seller hoping you haven't done the math. The lender's appraiser will do the math for you, and your loan will reflect reality, not the seller's wish list. Why smart buyers still choose it? Approval rates financing, lender familiarity, strong resale floor, if you buy at the right price. Real used price range, raw cargo van, 2018 to 2021, $28,000 to $44,000. Professionally converted units from established builders, $48,000 to $80,000. Factory Class B builds from Airstream and Winnebago, $65,000 to $115,000 used. Maintenance reality. The 2.1-liter four-cylinder diesel is solid and relatively low drama. The 3.0-liter V6 diesel is where it gets expensive. DPF and DEF system issues appear predictably between 120,000 and 150,000 miles. Budget $2,500 to $4,500 for DPF cleaning or replacement. Labor at a Mercedes dealer runs $180 to $260 per hour. A routine service hits $800 to $1,200 easily. Build a relationship with an independent Mercedes diesel specialist before you buy, not after your first warning light. Biggest hidden cost? Depreciation exposure on overpriced units. If you pay $58,000 for a van the bank appraises at $41,000, you are underwater on day one. That $17,000 gap comes out of your pocket in cash at signing. Many buyers don't have that. Their deal collapses. Their deposit disappears. Who should not buy it? Anyone targeting private sale custom builds without a pre-purchase appraisal. The Sprinter name on a van does not guarantee the conversion adds real appraised value. That's a distinction that will cost you $15,000 if you get it wrong.
Part 2. Ford Transit, the loan that gets approved when Sprinter deals fall apart. Same credit, same income. Different van, different outcome. That sentence describes what's happening to buyers in 2026 every single week, and it's why the Ford Transit is the smarter financing decision than the Sprinter for the majority of buyers. Not because it's a better van, but because it's a better loan. Ford's financing ecosystem is massive. Banks, credit unions, captive finance arms, they all have years of transit collateral data. Approval rates are higher, loan terms are more competitive, and because more lenders are competing for transit loans, buyers end up with better rates on identical credit profiles. A 0.5% difference in interest rate on a $60,000 loan over 84 months is over $2,100 in real money. That's not a rounding error. That's a transmission service budget. That's 2 years of insurance. That's money you keep because you understood how lender competition works. Why smart buyers choose it? More lenders competing for your loan means you have leverage. That leverage is worth real dollars, not hypothetically, but in the rate you lock on day one. Real used price range. 2019 to 2022 Transit 250 or 350 high roof, $22,000 to $42,000. Converted units from established builders, $45,000 to $75,000. Factory Class B builds, like the Winnebago Travato, $65,000 to $92,000 used. Maintenance reality. 2 engine paths, and the choice matters. The 3.5-liter EcoBoost V6 is capable, but runs warm under sustained load and wants premium fuel. Turbo replacement runs $1,800 to $3,200 per unit, and the twin turbo setup means double exposure. The 3.5-liter naturally aspirated V6 is simpler, more forgiving, and the better long-term ownership bet if you can find it. Ask specifically for the naturally aspirated unit before settling for the EcoBoost. Biggest hidden cost? Cooling system stress on EcoBoost units used for towing or sustained mountain routes. Overheating events that aren't caught early cause head gasket damage. Head gasket replacement on a Transit runs $3,500 to $6,000. If the van has a tow package, get a full thermal history before you make any offer. Who should not buy it? European buyers. The Transit is built around North American infrastructure, parts chains, and service networks. In Europe, there are 2 better choices. In both of them, finance cleanly. Part 3. Ram ProMaster, the platform most people are avoiding for the wrong reasons. Here's something most van communities won't say directly. Most people avoiding the ProMaster aren't making a smart decision. They're copying opinions they heard from people who also never owned one. Front-wheel drive gets dismissed like it's a fatal flaw. It isn't. In a van this size, front-wheel drive means a completely flat floor from bulkhead to rear doors, no drive shaft tunnel running through your living space, lower load height, tighter turning radius. In a campsite with awkward access or a city with narrow streets, the ProMaster is genuinely easier to place than a Sprinter. That's not a compromise. That's a design decision that works in your favor. Why smart buyers choose it? Lowest cost entry into full-size van ownership that lenders are still comfortable financing. The price gap versus Sprinter and Transit is real.
$8,000 to $14,000 on comparable mileage, and that gap is your build budget, your emergency fund, or simply a smaller loan with lower monthly exposure. Real used price range: 2018 to 2022 ProMaster 2500 or 3500 high roof, $22,000 to $34,000. That is meaningfully cheaper than equivalent transit units at the same spec and mileage. Use that gap deliberately. Maintenance reality: the 3.6-liter Pentastar V6 is a Chrysler engine found in millions of vehicles, widely serviced, inexpensive parts, available everywhere. Watch the transmission on high-mileage units. Fluid services at 60,000 and 90,000 miles are cheap. Ignoring them and hitting a transmission replacement at 110,000 miles is $4,000 to $6,500. That's a preventable cost. Biggest hidden cost? Depreciation curve is steeper than Sprinter and Transit. If you're planning to sell in 3 to 5 years, model that into your total cost. If you're buying to keep, it's irrelevant. Know which buyer you are before you sign. Who should not buy it? Anyone planning regular unpaved terrain. The low front fascia and front-wheel drive layout create clearance limitations that can't be engineered away with a lift kit or bigger tires. If fire roads and forest service tracks are part of your regular route, the ProMaster will disappoint you in ways that matter. Part 4. Fiat Ducato, the European platform that dominates because the data says so. If you're buying in Europe and you're not starting with the Ducato, you're starting in the wrong place. More factory-built campervans and motorhomes built in Europe are on the Ducato platform than on any other base vehicle. Heimer, Knaus, Deadlifts, Pilote, Auto Trail, they all build on it. That market consensus is not an accident, it's a signal. And for financing, it's the most important signal in the European category. European lenders have decades of Ducato residual data. Financing on a 2 to 5-year-old Ducato-based campervan from a recognized factory builder is typically the cleanest approval process in the segment. The factory designation is the critical word. We'll revisit why that matters when we get to the mistake section.
Why smart buyers choose it? Lender familiarity, dense service network across the entire continent, low running costs per kilometer, and the factory build's premium gives your collateral a value that banks can actually model. Real used price range: raw Ducato panel van, €14,000 to €28,000. Factory-built campervans, €35,000 to €75,000 depending on builder, spec, and age. High-specification Heimer or Knaus units, €45,000 to €70,000 used after 3 to 5 years. Maintenance reality: the 2.3-liter multi-jet diesel is one of the most thoroughly developed engines in European commercial vehicles. Parts availability across the continent is excellent. Watch for turbo wear on units over 180,000 kilometers. Budget for specialist diagnostics on post-2020 Euro 6 variants. The emissions control electronics generate fault codes that generic OBD readers won't resolve cleanly. Biggest hidden cost: the wrong inspector. A general mechanic will clear surface faults. A Ducato specialist will find the €3,000 problem hiding underneath. That pre-purchase inspection fee is not optional. It's cheap insurance against an expensive surprise at 30,000 kilometers. Who should not buy it? USA buyers. The Ducato's advantages, parts network, lender familiarity, service density, are entirely European. Importing one to the States creates financing complications, parts delays, and service gaps that make zero sense when Transit and Sprinter exist. Part 5. VW California. Why the most expensive option has the best approval odds in Europe. The California is expensive. That's not a debate. But here's what the critics always miss. The California holds residual value better than almost anything else in this category. A 2019 California Ocean in clean condition is worth close to what it's sold for new in real adjusted terms. In a segment where 30% first-year depreciation is standard, that is not a small distinction. Lenders know it, and they price their approval decisions accordingly. Why smart buyers choose it? The California's resale curve is one of the most documented in the European campervan market. Banks aren't estimating collateral value, they know exactly what that asset is worth at year 2, year 4, year 6.
That certainty translates directly to loan approval in competitive interest rates. Approval rates on California financing are consistently among the highest in the premium segment. Real used price range? 2018 to 2022 California Ocean, 55,000 euros to 80,000 euros. Beach variants, 42,000 euros to 62,000 euros. Grand California, 65,000 euros to 90,000 euros. Maintenance reality, VW dealer network across Europe is best in class for availability and consistency. The 2.0 TDI is proven across millions of kilometers. The California's pop-top, awning, and kitchen systems are factory engineered, not aftermarket installs from a conversion shop. Fewer improvised components means fewer unpredictable failure points over time. Biggest hidden cost? Total interest exposure over the loan term. Run the 5-year total cost of ownership, including financing costs, not just the sticker price. A California at 65,000 euros financed over 7 years costs you substantially more than a Ducato-based campervan at 45,000 euros, even accounting for the residual value advantage. Do that calculation yourself with your actual numbers before you decide. Who should not buy it? Full-time van lifers who need serious long-term storage and living space. The California is engineered for weekend and 2-week use. It is exceptional at that specific use case. For full-time living with 6 months of gear and real comfort requirements, a larger factory motorhome is the more honest and often more financeable decision at that price level. Here's the compressed version of what separates buyers who close cleanly from buyers who lose deposits and start over. Mileage thresholds. Most lenders cap financing at 100,000 to 125,000 miles, or 160,000 to 200,000 kilometers. Above those thresholds, you're typically in cash purchase or personal loan territory, with higher interest rates already baked in. Know your lender's cutoff before you fall in love with a van on the wrong side of it. Engines to flag before inspection. The Mercedes 3-liter V6 diesel in pre-2017 Sprinters has DEF system issues that generate expensive fault codes on a predictable schedule. The Ford 3.5-liter EcoBoost before the 2019 refresh had cooling vulnerabilities under towing load. The pre-2015 Ducato 2.3-liter shows timing chain sensitivity at high mileage. None of these are automatic rejections. All of them require a compression test and full diagnostic scan before you make any financial commitment. Best build years by platform. Sprinter, 2018 to 2021. Transit, 2019 to 2022. ProMaster, 2017 to 2022. Ducato, 2015 onwards. California, T6 from 2015. T6.1 from 2019 onwards. The service history rule. Physical records or a verified digital log, not a verbal assurance, not, "I've always maintained it well." If a seller of a diesel van with over 60,000 miles cannot produce documented service history, that gap is hiding something. The documentation gap is the red flag. Walk away. Approval rate by build type. Factory built by a recognized manufacturer, high approval rate. Custom conversion by a documented professional builder with transferable warranty, moderate approval rate. Amateur DIY build, lenders flag it, appraisers discount it, resale becomes unpredictable, and this is exactly where the most expensive mistake in 2026 lives. This is the single most expensive mistake in the current market, and it is happening constantly. A DIY or amateur conversion does not add value to your loan application. It destroys it. Here's exactly how it plays out. You find a Sprinter listed at $68,000. The seller has put $25,000 into a custom build, solar array, lithium battery bank, a handcrafted kitchen, cedar ceiling panels. It looks incredible. It photographs beautifully. You negotiate to $63,000. You pay a $3,000 deposit to hold it. Then you apply for financing. The bank doesn't care about your cedar ceiling. They see a 2018 Sprinter cargo van with 95,000 miles. The appraiser runs the comms. They come back at $44,000. The conversion adds 0 to their number because they cannot resell it predictably to a standard buyer, and they cannot underwrite amateur workmanship the way they underwrite factory engineering. Your loan is approved for $44,000. You need $63,000. That $19,000 gap comes out of your pocket. in cash before you take delivery. Most buyers don't have $19,000 in liquid cash sitting ready. The deal collapses, the $3,000 deposit is gone, 3 months of searching disappears, and now you're starting over with less money and more urgency, which is exactly when buyers make worse decisions. The fix is not complicated. Get a lender pre-approval that includes a formal appraisal before you pay any deposit on a converted van. Not after, not during, before. If the seller won't hold the van for the 3 to 5 business days it takes to complete an appraisal, that response is your answer about the deal. Sellers with clean assets at honest prices wait. Sellers sitting on overpriced conversions don't. Use that information. Loan rejection in 2026 is not a credit problem, it's a vehicle selection problem. The buyers closing deals, locking competitive rates, and building real equity are the ones who started from the lender's perspective, not just their own. They understood that a $60,000 van and a $60,000 financeable asset are not the same thing. They bought platforms banks trust. They avoided the collateral gap before it swallowed their deposit. They asked the right question from the start, not what's the best van, but what will the bank approve at the best terms. That question is the difference between a clean deal and a collapsed one. If the bank doesn't believe in your van, you shouldn't either.